Okay, guys. Hi, good afternoon. Welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at First for Trading. Okay, we supply technical analysis and trade recommendations to banks, hedge funds, retail investors. Basically, what we do every month, we host a webinar at FX Street, and I try to decipher or give trade recommendations, outlooks for the major currency pairs for the month ahead. So the way that we do this is basically I break it down through chart formations. They're pretty basic charts. I haven't got many indicators, oscillators on there. Okay, it's really more about price action. It's about support and resistance levels, and it's about projections and sound money management. Obviously, decent risk reward. So what I look to do in my day-to-day trading, I take a lot of scalp trades. I've always got a bias with regards to the medium-term outlook. What I always say is that it's like I don't like to reflect gambling back to trading, but it's like playing poker. Okay. The higher the time frame, the higher the card. So if we've got a decent reversal pattern, so on a monthly time frame, then that can be regarded as an ace if you're holding 5 cards. Okay, and as you break down into shorter time frames, obviously the value of your cards become less and less and less because the bias for the big picture becomes less and less and less. So I hope I sort of explained that well enough. So what I'd like to do, especially at the start of every month, is basically break down every currency pair into time frames. So I'll look as far as a monthly chart. I'll come all the way into an hourly, 15 minutes, 10-minute chart. But I want to know what the big picture is, or still is. Okay, they don't change that often, but it's always good to have a reflection and to see where support and resistance is and where these larger time frame outlooks are for the month ahead. So I always start off with the dollar index. So basically, dollar index, as we can see here, has been in a large consolidating triangle formation literally since 2007. Now we can't trade that, obviously. Somebody or some guys might say, well, why do we bother looking at monthly charts? Somebody did a report or some back testing, okay, just purely trading monthly charts, okay, and he or she, I'm not sure who it was, this report was published in one of the trading magazines, and they just traded on Acute Monthly Reversal Candles, okay, AMRs, and trading one lot, 6 currency pairs, and I think it was from 2009 until present day, and this account was up something like £500,000. So they're not to be poo-pooed, if you like. Breaking down time frames is a great idea. Okay, what I also like to look for in breaking down time frames is not just chart patterns, but also candlestick formations. My favourite 2 formations, if you've not been here before, are outside engulfing candles and inside Arami candles. And outside engulfing candle, we've got one here. Okay, it takes out the whole of the range of the previous candle. So the bias was still to the upside, the bias changed, and we closed below the low, and we basically took out the whole of that previous candle. So if we just show here, that was the range. Okay, and this range obviously took that out. So that's an outside bearish candle. And inside Arami is completely opposite. Okay, it's a candle that stays inside the range of the preceding candle, and that basically shows investor indecision. So one of them shows a direct reversal of trend, and the other one shows investor indecision. We have to wait for a breakout. Okay, just trying to work out. There you go. Let's get those off. So here we've been in a large consolidation triangle formation. Now this, I obviously haven't had to update for some time, but this has been my midpoint. Now I think this candle here, this outside engulfing candle, is still dominating price action. Okay, 80.26 is the midpoint. We can see here that the cloud, the Ishimoto cloud, is basically turning over all the time. Now that's indicating, it happens a lot in consolidating triangle formations, it's indicating that there really isn't much of a trend at the moment. Okay, the bias is going from bullish to bearish very quickly, and that is making long-term forecasting in a lot of the dollar currency pairs pretty hard to assess at the moment. But what we have got here, okay, we've got this outside candle, we've got a spike down towards the cloud last month and a rejection. So that has seen dollar buying, okay? So dollar buying off the cloud. We're above the midpoint, plus I've also got this as the target level. So we've taken the AB leg and projecting it up to CD leg. And this lines up quite nicely with 9011, okay? So the bias at the moment is still to the upside. Plus, if we look at these legs, okay, all these legs are in three waves. Now, that dictates three wave corrections or three wave formations, A, B, C, D, preferably, dictate corrective patterns, okay? And if we just stick one in here, okay, then I think even if we get a short CD leg, it's still going to break out of this triangle formation. So the bias at the moment, my medium-term bias on the dollar, is mildly bullish. And it's got to be mildly bullish at the moment because obviously I've had a decent down move in July. But it is mildly bullish. So I then break that down into shorter time frames. Let's see, hourly, 8 hourly I want. Okay. And this was basically the move up that we've had up to now. Okay. Not aggressive. We paused at 127%. It didn't form any reversal formation. So even though we had an ABCD leg, and there was a pause in price action here, and if you go back to, not Friday, I think it was Friday, then you just saw that downward move in euro, dollar, etc., just correcting to the upside. Okay, and that was basically because the dollar index had hit that ABCD formation target. Okay, it's now, there wasn't any reversal candles here, so we had an inside Arami, but here, this formation, these are called inside soldiers. So you get a bullish bar, inside soldiers, and then another bullish bar, and that is a continuation pattern. Okay, so there's no indication at the moment that this buying of dollars is reversing. Okay, so my bias, my medium-term bias, and even my short-term bias at the moment is to buy into dip. So past 127%, if I just put a 161.8% fib on there, obviously lining up pretty close to the previous high, 82.61, this one coming at 82.71. So still expecting some dollar buying. What's happened here, we've actually broken out of this minor channel and we've come back to retest. Okay, it has rejected it only slightly at the moment, but my bias is still for a move to the upside and then potentially a correction back to test this retest, this breakout level, and then a move back up. So at the moment, mild dollar bullish bias. Okay, any questions about the dollar index? And of course, I concentrate a lot on the dollar index because if we get the dollar index right, we can get virtually 6 of the FX majors. Not necessarily correct because we've got correlation. Obviously, we've got euro sterling, blah 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 blah, and we've got the other currency pairs to lay over the top. But if we can get the dollar index correct, then that will give us a good bias for most of our major currency pairs. Okay, so any questions up to now? And these are the charts that I use to trade with. I do use some oscillators, indicators. I use average true range. I use RSI for strength, and I use parabolic ZAR. I use DeMark. These, but for the medium term outlooks, I always look at what I call vanilla charts. Okay, I don't want to be blinkered by anything else apart from where I really see formations going to. No questions? Okay. So, weekly euro dollar. Been quite choppy. We could say this is a head and shoulders formation. We had a decent outside bar here, moved down to channel base, and then an outside bar again to move us back to the upside. So it has been quite choppy. So what is the fib from the 05 high? Is that on the dollar index? Let's say you have to take a fib a long way back. Okay. Now, we could say that this is a head and shoulders formation. I'm not really, I've got a question mark in there. The reason why it's not really a head and shoulders formation is because we want to see those formations happening. Obviously, a bearish one at the top of the trend and a bullish one at the bottom of the trend. This is midpoint. You know, this is the trend. This is midpoint as far as this weekly chart is concerned. But it still gives a decent bias to the downside. Okay, levels above 61.8% have been rejected on a couple of occasions. And then if we break this down into shorter time frames, not that one. Not that one. Do apologise. The sun's glaring on my PC screen at the moment. I shouldn't complain. Okay, the bias is still for lower levels here. So we had a rally up. We had indecision at the top. We had a break of the low. We had a move back up. A rejection, basically of a Maribuzo level. So Maribuzo level is the midpoint of a strong bullish or strong bearish. Hi Joshua, good to see you, mate. A strong bullish or a strong bearish candle formation. Okay, it can act as support, it can act as resistance. Obviously, on a bullish candle, more often than not, when it moves back down to the midpoint, that then becomes support. But here we can see that this was basically the midpoint of this bullish candle. There's also a previous high. Okay, we moved back up, rejected, vibrated around a fair bit within the channel formation, and then moved to the downside. It has surpassed, okay, this 161.8%. Basically, what we're advising our customers to do at the moment is to fade moves lower. So, in other words, get involved, but also sell into rallies. Okay, potential target 130.50, which is the 261.8% fib. Taking that back to here. It's about midpoint or congestion area, I should say, of this whole formation. Okay, so 130.50 is our short-term target level with a bias to to sell into rallies at the moment. We'll then look for a small correction higher to then move back down. Remember that we've got to keep an eye on that dollar index. Okay, when that dollar index, if that dollar index, taking it back to here, okay, when that dollar index gets to 82.71, then we've got to obviously take care on still calling for lower levels in euro dollar. I'm quite happy to call lower levels in euro dollar at the moment because I'm more bearish on euro sterling. So I've got that lot of more aggressive push for euro to trend lower than for cable to trend lower, if you see what I'm saying. Okay, so short term, 130.50. Then watch that dollar index for a bounce, and then expecting this currency pair to move to the downside with the medium term. It's probably going to be 2 to 3 weeks. We're getting underneath that 130 level, which is going to be quite pivotal again. Cable. What's that doing there? Okay, cable. Again, it's been a pretty choppy currency pair. There's been quite decent spikes in both directions. Obviously, everybody was waiting for sort of Carney to come in, give us some direction on this forward direction, if you like. Market seems to have appreciated that, but we are still getting pretty volatile moves on an intraday basis. Again, what we're looking to do at first of trading at the moment is we're trying to fade moves. So we're not using our full allotment at specified levels. We're fading moves, so we might be selling into it at 50% level, then adding in at 61.8% level, then stop above, a potential Gartley formation. But anyway, back to here. This still looks corrective, so we've got 1, 2, 3, okay, then down, and then 1, 2, 3. This isn't any particular fib level, plus the fact this low from the 28th of August has surpassed this high from the 25th of July. So any sort of bullish forecasters, Elliott wave enthusiasts, etc., their wave count has been blown there. So an ABCD formation has been completed. It was virtually pit perfect at 157.16. We do like to watch these formations, especially in shorter time frames, because the market does aim towards them a hell of a lot. Okay, so we like that repetition of things working. So our bias is now to the downside. If we break that down into shorter time frames, not sure where we are. Right here. Okay, and this is basically what we can see now. So we've had a choppy move to the downside. Okay, first waves or first and second waves, as far as Elliott waves concerned, are always the hardest waves to dictate, to forecast, because until this breaks through here, you can't really say it's wave 3 or even a potential ABCD formation. But what we have had is we've had a decent move lower from the 21st of August high. We actually posted a video on this on Saxo Trading Floor this morning. So we've had a decent move lower from the 21st of August high. We've then had an ABCD formation. We had a bit of a move lower from this. So actually our medium-term call, we faded this. So we've got short at 70. And our next short was at 06, so we've actually missed that next short. But what we have got, okay, is a choppy three-wave correction. This, I believe, is going to be a right shoulder. We're getting a decent rejection from that right shoulder as we speak. Okay, looking for a move down towards the neckline, which is going to come in around about 154.32. A break of neckline, and then a push aggressively lower towards 151.50 in the coming days, probably weeks. Time span, I would say, probably just over a week. But the bias here is still to the downside, so that's adding more ammunition to dollar bulls, basically. So left shoulder, neckline, right shoulder. Shorting, trying to build short positions up around here. Looking for a break, probably adding on a break, and then target 150, Now, pulling that back onto a daily chart. Oh no, excuse me. I don't know what's going on there. Fat finger. Okay, so 151.50 is the target level, which is, if we put a trackball on, is about here. But I think anywhere between 152 the figure and 150 would be a decent level to target. If we just put a line across here, get rid of that because that drives me mad. Right, previous low, previous high. So support, resistance, now support. We move across. You can see that there's a lot of price action around this zone. So, like I said, fading the move lower, looking to build a short position, probably increase on the break of the neckline, and then aim towards 152, 151.50. So basically, if you're fading in, then you can also fade out. So you can fade in 1 unit 50% retracement. We're going back up to here. So fading one unit at 50%, 1 unit at 61.8%, and 1 unit or building on a break here. Okay, and then fading out of the positions, fading out at maybe 152.30, 152, and then 151.50. Increasing your risk to the upside, okay, and then getting out of your risk, or taking your profit, fading out of your profit to the downside. Any questions at all? Just wondering what we might have on an hour here. Yeah, it's starting to. It's not aggressive, is it? That sort of spanner in the work this morning. That outside engulfing, then obviously the figures, PMI figures, has pushed it a little bit higher. And again, if we look across, it was quite a decent area of support. Any questions at all? Now, I'm going to skip dollar Swiss and we'll go back to that if we've got time, because dollar Swiss really, Euro Swiss. If Euro Swiss is stuck in a range, then if Euro dollar goes up, dollar Swiss should go down. Okay, broadly speaking, because Euro Swiss is going to go nowhere. We are actually pretty bearish in Euro Swiss at the moment. We've sold at 123.33. We tried to sell this morning at 43. I think we've got a 41 high trade, and the target level is about 123.23, which is a weekly channel base. So the bias is to the downside. So even though I've got a quite aggressive euro dollar bearish outlook, my bullish outlook for dollar Swiss is not as aggressive. In fact, I'll just show you the intraday chart. So just wary here at the moment. Okay, had a wedge breakout. I've had a push up. Got 161.8% here, which is 93.76, and it's a previous area of resistance. So again, dip buying. Let me just have a look on my system. on my other PC. I'll tell you where I've got support coming in. So sort of dip buying, I've got support or a range of support in between 93.40, 93.23, so sort of around about here. Okay, for looking for bullish signals. And when I say looking for bullish signals, okay, these aren't big pictures because this is a 4-hourly chart, but I don't want to trade with 100 pip stop loss or 50 pip stop loss. So what I look to do, especially on my scalp trades, is I pick an area of support from the system that we have developed, and then I go down all the way down into 10 minute, 5 minutes, 15 minutes, 3 minutes, sometimes even 1 minute candle formations. Okay, and look for bullish reversals, look for exhaustion signals, look for outside engulfing, look for a parabolic ZAR to turn around, etc., etc., etc. Trying to keep stops tight and targets large, if you like. Okay, so sort of 10, 15 pip stops. And potentially, if you grab this one and it flow, you can get up towards 95.18, which would be about a 200-point target from that level. So dollar yen, Bill and Ben, was in a large consolidating daily triangle formation. We had some good figures out of Asia over the weekend. The Chinese figures, they were actually saying it was quite strange that the actual Reuters or the Bloomberg results were in line with the HSBC results, and they say that doesn't normally happen. And that gave it sort of a bit of a double whammy and pushed it through. Now, this is a triangle formation. Strong bears or bulls, I should say, will take that as a pennant. I don't think it is. I think the bias is to the upside, but when I look at these internal trends, if you like, or moves, I can see them all in 3 waves. So I think this is just corrective. I think the big picture will be a break eventually above sort of 103.72, but I think the time duration is probably going to be a lot longer. And I think what we'll probably end up seeing is a larger ascending triangle formation. So basically what I've done here is I've taken this leg and again projected it from here. This is AB, this is CD. So my bias is to the upside. Intraday, we've actually looked for a move lower to try and get long. 90.10 was our trigger level, and I don't think we got it. And this is actually breaking it down into shorter time frames. Okay, at the moves inside that daily consolidating triangle formation. This is what I mean by the legs. Okay, these are perfect ABCD legs. They're very messy, okay, which normally means that they're corrective. And all I've done here for my next target area, so I've just taken that leg, which is 3 legs, and just projected it up. Now, that wouldn't be a full ABCD formation because obviously it won't push above this level. But 100 has been quite pivotal in dollar yen for quite some time. If we go back to here, we can see 100, okay, acted as resistance, acted as support, acted as resistance, okay. So that level there, I think, is the next target level for a pullback. So because risk or reward isn't particularly huge, 50 pips, okay, then we're trying to keep it tight and just trying to buy into dips. And if you can see here, just in this bottom left-hand corner, 99.14 or 99.15 was the low. So we missed our our trigger by just 5 pips this morning. So that's the bias for dollar yen. So up towards 100. Then we'll probably look for a move back towards this channel before the next leg higher. And again, that gives us, going back to the dollar index, okay, so we're always reflecting back to the dollar index. Think about where that 161.8% extension is. When it hits that 161.8 extension, then we should be expecting some dollar selling. Might line up with it getting to around 100.05 or, something around that level. And then that pullback as the dollar index keeps moving to the upside. I'm just looking at the chat. Keep buying dollar yen. Aussie dollar. Let's break this one down. Okay, big picture. Monthly. Huge channel formation. We've hit the bottom. We've corrected higher. Now, why should we not have a bullish bias now? Well, the strength of the decline. Okay, you've got 5 months of sell-off. Also, in the back of our heads, or my head, is we've got that dollar bias, okay, dollar buying, plus rallies or gains continue to be sold into, plus there's no bullish signals here whatsoever. So even though intraday bias, that one, is to the upside, we've actually got a neutral call on this morning. We're looking to sell at 90.69 and looking to buy at 90. And again, we've been a bit unlucky there because it's 90.08. It's posted the low, so double bottom formation. Only expecting small gains now before the bias turns to the downside. DV's right there when he's saying about channel break, because we've got this formation which is sitting quite happily waiting for the breakout. So a breakout of that channel base in the medium term bias is for a move down towards 84.08 with dollar buying. One thing you should note here is that it's a bit outside. By that I mean this right wing, the third price action to stay within the trend. Okay, this sort of moved across, consolidated for quite a few months before moving lower. So it's not the best formation you could have, but the bias is still to the downside. Euro sterling, I'm not going to spend too much time on this one. We've been clucking about euro sterling moving into the downside for a while. It's caused me a fair bit of personal financial pain because I've been selling into gains even though it kept moving higher. So here, sort of monthly, it's a bit messy. I don't know if I can expect too much more out of it. What I am looking for is this Marubozu level, again, which is coming in around sort of 83.10, 83.20 level. It's also a relatively decent area of price action. Monthly, we didn't quite engulf, but we are breaking back down inside this range. So weekly, this is going to be is my first target level. It's 83.51. So even a ABCD formation, we've broken out of this channel. We did spike up all the way to the 88.6% fib. Again, what we're advising customers at the moment, we're short, medium term, and we're trying to jump on this on an intraday basis. Not really that choppy at the moment. You know, lows keep on getting broken. We keep on getting decent pushes to the downside. This is the wedge breakout, engulfing pattern off the top. Okay, and then, you know, 83, 85 is actually the first ABCD, which is an inner leg, if you like, of that larger picture. I don't know what else to say about Euro Sterling. This is obviously a decent resistance level now, around 85, the figure, which has been quite pivotal for the last few months. So any gains up towards this level, I'd look to sell into. Euro yen. Not particularly pretty. Outside pin bar, okay, set it lower. Price action since then, monthly, been pretty choppy. Sort of breaking it down into a daily time frame, and we're assessed to be in a triangle formation. Daily, we've had, again, we tried to, I can't remember what level we were looking at. Oh, we did buy the dip this morning. We got long at 130.70, which is close to the Marabou zone. We also had some bespoke support in there, but again, it's not aggressive. I would look to sell it anywhere sort of close to this upper trend line, and sort of intraday buying dips really on towards this Marabou zone level, which again has been sort of quite pivotal. If we look back, for price action really since April, this level has been quite solid. My medium term view, to be perfectly honest, I haven't really got one. A hard currency pair to trade intraday at the moment, let alone medium term, with obviously a bias for euro or euro crosses to go lower, but then yen pairs to go higher. So I think that's going to continue until we get a real breakout of this range. I think it's going to be quite hard, and we should also look at this as well. You know, even a breakout of the range, and we're probably only going to move up to sort of 132.75 before, and again similar to dollar yen, will probably form a larger ascending triangle formation. And if we do push up there, then obviously the bias is just to buy into dips until we get a break of that 132.75 level. I don't normally cover stocks, but I suppose with non-farm payroll figures coming out on Friday, might be just worth having a look at the Dow. Now this is something that I've been quite interested in. Making a mess here. Okay. But this, obviously engulfing candles being my favourite sort of chart formation. This looks quite serious. I don't know why that's moved. Okay. We've got an outside monthly bar around about a 261.8% extension level. Now, I am 90% technical, 10% fundamental. You can't obviously ignore what's what's going on in Syria at the moment, etc., etc., etc. If you break this down into shorter time frames, so just get rid of this. I wouldn't sell it now. That's what I'm trying to say. Just in case you're hitting the hitting the sell button. Look to fibs. Okay, but a 261.8% extension there. So cloud, I think, is quite a decent area. 1.8% level, 151.13. I think that we might get a little bit of a shock to the system on Friday. If the Dow hasn't moved up to this level by Friday, then I think we might get a shock, a decent non-farm payroll figure. And then I think we'll see a push up to this level. If it's already around this level on Friday, then I think we'll get a shock with the non-farm payroll figures and it's going to move to the downside. Either way, my bias for the Dow is to definitely to sell into gains this month. Yeah, we do a lot of work with Saxo, and it is a great platform. And to be fair to them, they've spent a fair bit of money on the charting packages. So there's a lot of studies here that you can use. I mean, everything that I really need. You can open up a lot of windows, and you can obviously have a lot of different views. So yeah, I mean, I use it for this sort of analysis. I've got Aspen Fix, which I use for my sort of day-to-day stuff, but obviously this isn't free. If you've got an account with Saxo, then obviously the chart package is. Any questions then? We've done all the majors. We've done the dollar index. I'll give you my best guesstimate, I should say, of where I think currency pairs are going to go. Obviously, you know, they're testing missiles at the moment, supposedly. If it does come to the crunch, then I think that pullback in the Dow could be very short-lived, and I think we could see some aggressive dollar buying as everybody runs for safe haven. Any questions at all? I don't do gold. I don't do gold. My colleague Steve, he analyses gold. I think he's just posted one on Trading Floor actually, which is a free source of information, Saxo Trading Floor. I don't want to analyse gold just in case I post a different view than he's posted on his report. Short-term trading. So we've talked about long-term forecasting, okay, but obviously how do we get in on a day-to-day basis? Red dollar, suppose we'll look at. So what I have a tendency to do, okay, is note areas of interest, of support, resistance. I don't really use daily pivots, okay. I then like to highlight indecision bars, figures. So we've got one here. Got some here, blah, 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 blah. But we've got one here, which was the near the break line. So I know engulfing candles, and I know inside bars, okay? And basically what I'm looking at these inside bars, and again, when you break it down through time frames, it's not gonna look like you've got loads and loads of lines all over your charts. Okay, and then what we can note is that when we get these inside bars, these indecisions, okay, a lot of the time the top of the inside bar will act as resistance. I'm going to use a crossover here, or a pointer tool actually. Okay, it acts as resistance, and obviously the bottom of it acts as support. So we gyrate, okay, around that inside bar, and then basically what we want to be looking for is when we break it down into short time frame, if our bias is still to the downside, then obviously we want to be looking for reversal formations or bearish reversal formations in shorter time frames. And the basic way to do it, okay, is break through time frames. So 4 hours, we don't get any reversal candles. I don't know, 2 hours. Okay, 1 hour candle. Okay, got an outside bar here. Okay, as it pushes outside bar, there breaks, and then comes to retest. Here, we've got an outside bar, okay, which has rejected the top of that inside harami. Okay, and then breaks to the downside, moves back up. This was resistance, sorry, it was support. Now it becomes resistance. Okay, outside bar doesn't get taken out, does very nearly. Okay, then an inside bar to the downside, etc., etc. And we can do this depending on how tight you want to be, how tight your stops want to be. You can do this all the way down through time frames. Okay. Looking for decent reversal candle formations at areas of support and resistance. So here, inside bars, we've then got an outside bar, moves to the downside. This is still resistance. Okay, if you put your stop above there, you would have been spiked out on the balance, if you like. Outside bearish bar, bit of a pin bar, but it was at resistance. Outside bar, pretty close to resistance. So you just keep on looking for these different bearish formations in different time frames. And of course, the lower the time frame, you can catch these. Then the lower the stop. Basically what I look to do for a stop is I look to take the bearish outside bar. I take the length of that bearish outside bar and then add the length to that bar. So for instance, for argument's sake, say this is the bearish outside bar. I'll take the length of that bearish outside bar, I'd add it to the top of that bar, and that would become my stop. My target, or my first target for half my trade, would be the same on the other side. Okay guys, our time is up for this month. Any questions at all before we call it a day? No? Okay, well, I hope you all enjoyed it. I hope you've found it informative. So we do a 1 month trial at first for trading. If anybody wants to give us a go, if not, that's fair enough. Good luck with your trading, and hope to speak to you again soon. Okay, thanks a lot. Bye now.